and you attended our previous sessions, our previous webinar from last week and the one of the upper week, we actually went over what is Forex trading, the basics of Forex trading, and how to get started with Forex trading. Right, and that is why in today's webinar, we are going to be discussing on understanding currency pairs and reading quote prices. So before we start, we need to understand that the foreign exchange market is a place where currencies are simultaneously bought and sold. All right, so the foreign exchange market is simply a place where forex transactions take place. All right, and we know forex to be the exchange of one country's currency to another. That is what foreign exchange means. When you're buying one currency and you're selling another currency, it's just like you um going to the marketplace, giving someone your money for another goods. All right, you are exchanging money. All right, what happens in the foreign exchange market is you are typically exchanging money. You are buying and selling money. All right, not like your regular, marketplace where you buy goods and you buy, items. The foreign exchange market, what you do is you buy and sell money. Now, the amazing thing about this thing is that you are not buying a physical cash. You're not buying anything physical. What you're actually trading in the foreign exchange market is what we call a contract for difference. And what is this contract for difference? A contract for difference is just it's like a contract you hold for the share you are trying to buy or sell. For example, if you go to the stock market, right, the stock you want to buy a stock, right? When you buy a stock, you are going to be given there's what we call this you're going to be given a certificate that you own so and so stocks. All right, that stock is what you call your share. All right, that share represents the amount of stock you hold in a particular company. That is, if you are buying a stock of a company. But when it comes to the foreign exchange market, we do not participate like that. What we just have is contract for difference. So that contract for difference is a contract that if you bought this particular currency pair, all right, and when you buy, because you are buying in the anticipation that the price of that currency pair is going to actually increase in the nearest future, right? And then when you buy and the price of that currency pair actually increases, you are going to make money. So that contract for difference is what you hold until the value of that currency pair you are trading actually increases. Then you can sell it back to get your profit. That's what you're actually doing in the foreign exchange market. And that means that these currencies that you are trading, they are trade in pairs. All right, you're not just going to buy just the United States dollar. All right, it is either you are buying the United States dollar and you are selling the Nigerian naira, or you are buying the United States dollar, you are selling the um euro, or you are buying the Great Britain pound and you are selling the United States dollar. And that is where, if you look at your screen, you see that they are simultaneously bought or sold. You cannot just go and just purchase only one currency. And that is why we are trading them in pairs. They need to be at least two different currencies for you to have a currency pair. So as you are buying one currency pair, you are selling the other one simultaneously. All right, because you are actually saying that, for example, if you want to buy the Euro USD, what you are saying is, oh, I want to buy the Euro, I want to buy the Euro, and I want to sell the United States dollar, which means you are actually betting on the Euro increasing in value, or you are betting on the United States dollar decreasing in value. All right, that is what you are doing when you actually go long or you buy a particular currency pair. So moving forward, there are different type of currency pairs we have. We have the major pair, which are one of the most traded pairs by almost every foreign exchange traders, right? Both me and the professionals, and also the beginners. The major pair is our go-to. When you want to trade the foreign exchange market, they are our go-to. Now, the reason why these major pairs are our go-to is that they have a lot of liquidity because they are mostly used for international transactions. All right. Now, these major pairs are pairs that have the United States dollar in them. And because they have the United States dollar in them, they are used for international transaction and they have a very high liquidity, or they have a very high trading volume in a particular day or a particular week. So these major pairs are typically pairs that has the United States dollar in them and are also pairs from the major countries of the world. Countries like Australia, countries like Canada, countries like Eurozone, like the United Kingdom or UK, New Zealand, and even Japanese yen and China. All right, these are major countries we have in the world because they actually focus on international transaction, importation, exportation, and the rest of them. And that is why there is a lot of liquidity behind these major currency pairs. Now, for the minor pairs are simply these the currencies of the major countries of the world without the United States dollar in them. Now, if you look at your screen, you see that the major pairs have AUD, USD, USD CAD, Euro USD, and almost all the pairs there have United States dollar. But in the minor pair, that United States dollar is taken out of the equation. There is no United States dollar. What you have there are just the currencies of the major countries of the world, like Euro, GBP, Australian dollar, Canadian dollar, New Zealand dollar versus Japanese yen, and so on and so forth. Those are the type of currency pairs you have under the minor pairs. And then for the exotic pairs, which are the least traded pairs within the foreign exchange market. Now, these pairs are simply pairs that have one currency of a major country. It might be in the United States, it might be any other major country of the world, and then another pair that has a currency of an emerging country. All right, a third world country. So it can be any country who is still undergoing development and who and they are not yet at the world standard to be called a major country. We have different type of countries like Nigeria, South Africa, Mexico, Hong Kong, Turkey, and the rest of them. And some examples of the exotic pair have been listed here. You have the Euro Turkish lira, the GBP versus the South African rand, the Australian dollar paired with the Mexican peso, the United States dollar paired with the Hong Kong dollar, and the United States dollar paired with the Nigerian naira. All right, so these are the basic subdivisions of currency pairs we have in the foreign exchange market. And the majors are the ones that has the most liquidity, followed by the minors, and the least traded, where there is little to there's a very, very small amount of liquidity in the exotic pairs. Now, it is not that you cannot trade these exotic pairs. For one thing, this exotic pairs has the most volatility. Like when they move with a lot of volatility. What is volatility? Volatility is simply the movement of a particular currency pair within a short period of time. So you can actually see a currency pair like GBPs, which is Great Britain pound, paired with the South African rand, move massively within a very short period of time, and that is because there is not enough liquidity. Right, there are not enough participants. So if someone who has a very, very great big order comes into that market and places a very large order on that pair, it is going to move the market because there are not a lot of participants, and because there are not a lot of participants in that particular pair, it is going to cause a very, very large volatility in that particular currency pair. That is why the exotic pairs are more volatile than the major pairs. Right, the major pair are less volatile, but they have more liquidity, which means that the major pairs would move more often, but will not move with that type of volatility you see compared to the exotic pair. So the exotic pair would consolidate more, but when they move on a very, very large range. And I would show you guys some example like this. So if we go to the chart over here, all right, this is the trading view chart. I believe most of you would have an idea of trading view. Is that not so? Most of you here have an idea of trading view, or Is there anybody here who has not heard about TradingView before? Anyone? I hope you guys can hear me. I hope you guys can hear me.
Please come again.
Okay, what did you hear me say last?
If you are aware of TradingView, I am aware of it.
Yes, you are aware of it. Okay, that's cool. That's cool. So I was asking if people in this session know what TradingView is. That was the question. If you have an idea about TradingView, it is actually, so for those of you who do not have an idea, it is actually a platform where we carry out analysis on. All right, it is one of the most popular platforms where we do our analysis. Now, if you look at this currency, this current chart right here, which is the TradingView platform, you would see this pairs over here. Now, these are mostly the major pairs, all right, and these candlesticks are daily candlesticks. So each of these candlesticks represents a 1 day candlestick, and you can see how this pair is. Now I'll pull up an exotic pair for you to see. USD, I think it's USD Turkish lira, and you can compare that to this. This is the pair of the United States dollar and the Turkish lira. All right. Okay, so give me a minute. I think. Um, can you guys still see my screen?
Yes.
Okay, that's cool. That's cool. So you can see if you compare this, all right, let me compare it. Let me use the compare button to Euro USD. Okay. Okay, so this down here is the Euro USD, while the upper part is the United States dollar paired with the Turkish lira. All right, that is what we have. I'm trying to change the color so that it will be more visible to you guys. Okay, so this is it. Now you can see that the Euro USD is actually moving, and these are the daily candles. Every day it is moving, but it is not moving with very large momentum. But then you can see how the Turkish lira has just been gradually moving and consolidating, and then in 1 day you have this massive pump, just like a crypto token, right? That is because the Euro USD has more volatility, and there is much more buying and selling going in this market. So there is no single participant who can totally affect the outcome of the price of Euro USD. So no matter the order you are actually, no matter your order, no matter the size of the order you are placing in Euro USD, it is not going to have a significant effect on the price movements. But when it comes to Turkish United States dollar paired with Turkish lira, you would see that if an individual or a company or an investor comes in with a very high amount of order or liquidity and injects them into this particular currency, or he wants to buy it, right, it is going to somewhat have an effect in the price movement of this particular currency, right? Because there is not a lot of people trading it, and since there's not a lot of people trading it, it has lesser volatility, lesser liquidity, and it will be more volatile than the major pairs, right? So that was what I wanted to show you guys on that. Right, so going back to
Hello, sir.
this.
Please reshare your screen.
Okay. Okay, can you guys see my
Okay,
screen
all
now?
good. All good.
Okay, that's good. All right, so as I was saying, I just showed the difference between why the major currency pairs are more liquid and less volatile compared to the exotic pair being less liquid and more volatile. All right, that was what I just explained a few seconds ago. Now, coming to currency quotes. All right, what are currency quotes, or how do we view currency quotes when it comes to the foreign exchange market? Now, let's take, for example, the Euro USD, which is the most traded currency pair in the foreign exchange industry. All right. So on the Euro USD, when you are pairing these two together, we have two different countries' currency. One, which is Euro, and the second, which is the United States dollar. Now, the first one is always the base currency, and while the second is the quote currency, and we'll see the function in a minute. All right. So the base currency is usually the first currency in the pair. In any forex pair you're looking at, the base currency is the base currency, while the last currency is usually the quote currency. So the quote currency is the second currency, which shows how much of it is needed to buy 1 unit of the base currency. So just like for me to get €1, I need so United States dollar. The same thing goes on with every other currency pair you are looking at in the foreign exchange market. The base currency is always tagged as one. That is why you are not going to be seeing the value of the base currency on your price charts or on your trading platform. Instead, what you're going to be seeing, the price you're going to be seeing is the price of the quote currency. All right, because your base currency is always denoted as one, and your quote currency is how much of this quote currency is needed to get 1 unit of this base currency. So going back to this particular chart where we have USD Turkish lira. All right, so what you are seeing over here is actually the quote price. It is the price of this second symbol you are seeing here, the Turkish lira. That is what is displaying here. And what is this? The current price is 37.85. All right, let us just round it off to 37.85. What this is telling us over here is that currently, for me to purchase 1 United States dollar, I would need 37.85 Turkish lira to get 1 United States dollar. That is what it is telling us here on this price chart. So if it is increasing, it is going to be increasing in value. If it is increasing, it means the value of the United States dollar is actually going up and Turkish lira is losing its value, because right now it is at 37.85, and by next week when the market open, it is now at 40 Turkish lira for $1. It means that the Turkish lira has either lost its value, which is it is either weak, or it might mean that the United States dollar has actually increased in strength. So those are the two outcomes that could possibly make this particular currency pair appreciate in value. So once it is appreciating, it is telling us that either the United States dollar is gaining strength or the Turkish lira is losing its strength, right? But if the reverse is the case, if this starts dropping lower, it's telling us that either the United States dollar is getting weak or the Turkish lira is getting stronger, right? That's what you should be interpreting when you are seeing stuff like this happen in the foreign exchange market. Now, how do we read this quote price? How do we read quote prices when it comes to reading the quote price? That the reading of the quote price is simply speculation. All right. And the speculation is the act of conducting a financial transaction that has substantial risk of losing value, but also holds the expectation of a significant gain. In essence, the meaning of speculation means you carrying out analysis. So in order for you to read these prices, you have to know how to carry out your analysis and how to interpret that analysis, like what I just said a couple of seconds ago. If this is moving down, you know that either the United States dollar is losing its value or either the Turkish lira is gaining strength. That is what it means. And that is where analysis comes into play. You carrying out, analysis is how you read these quote prices. And as a beginner, you should not to be focused on, just carrying out analysis and trading and placing your entry and exit without knowing some other things. What are these other things you need to know? You need to know things like how to, you know, impute your leverage, the appropriate leverage to use, right? It is not enough for you to just know how to read these quote prices and say, okay, because I can read quote prices, then I'm not a professional trader. No, it is more than that. Just because you can read the quote prices does not mean you can actually manage your equity when price starts to go against you. You might not know what to do when it starts going against your favor. You might not know at what point would your setup be invalidated. And all of that thing is what you need to learn. So just because you have seen some videos where you see people draw on the price chart or tell you you have this support and resistance over here and you have this and this, it's not enough, right? What if you have that support and resistance and everything, and then your leverage um is not capable of you, or your margin is not capable of you opening a position, and you don't even know that you are opening a position with a margin that is way higher than your account, or with a leverage that is way higher than your account, and then the market just move few pips from your entry, and the next thing you are seeing is you're having a margin call and you're telling you your account has been liquidated and you are shocked. All right, so if you are a newbie and you are just starting out, there are things you need to understand to become a professional trader. All right, trading is not just where you come and you are looking for get rich quick. I know most people have actually advertised, you can make so and so amount of money within a few minutes. While that is true, all right, you need to understand that those people who are making such amounts of money within within that short period of time has actually gone through an immense education, right? They have actually gone through different processes of learning, relearning, unlearning, and knowing what works for them before they are able to, make such amounts in a day or in a week or in a few seconds. Now, if I should open my FX book account where I have my trading history, most of you might be shocked and you'd feel let's go there and let's see, let's open it. All right, there's something I want to explain to you guys. My FX book. All right, so this is my FX book, and I'm going to sign in with my Google account. And think this account over here. All right, so if I should go into over here, right, you'd see my you'd see these are my monthly return on investment for this year. This is January, this is February, and this is March. All right, and I did a 36%, 26% on February, and I'm currently 11% up, and I still have some um open orders that I have not closed, about $900 on the same account that I have not closed, and that is why I'm still at 11%. But if I should tell you that, oh, you can just come and do this thing within 1 to 2 months, yes, most of you will believe, yes, I can do it in 1 to 2 months, and this is proof here, I can do it in 1 to 2 months. But I did not just come into the market and start doing this within 1 to 2 months. I learned, I unlearned, and I followed a due process. So it's not just about you saying, oh, because this person did it, you also want to do it. You have to learn so many other things. And what are these things you need to learn? You need to equip yourself with the right knowledge and the right equipment. That is what we are trying to do in Learnity. That is why we at Learnity, we equip traders with the right tools. We don't give you the gibberish, we only tell you the good side of trading and don't tell you what really transpires at the back end. That is what your Instagram traders will tell you. Oh, you can make so and so amount of money. You can do this, but they don't tell you the requirements that you need. For you to be able to get there, you need knowledge. Right? I did not do this by mistake. I did not do this by just doing try your luck. I did this because of the information I have, because of the experience I have. And that is why at Learnity, we offer so many, opportunities for people to come and learn and also be experienced and trade the same way we do. So if you are joining this session, if you're in this webinar and you do not have a Learnity account, then I suggest you actually open a Learnity account right now. A link will be, shared in the chat box. So if you go to the chat box, there's a link that will be shared that you can use to open up an account with Learnity. And if you open up an account with Learnity, you can actually get to learn so many things with us at Learnity. So I'm just going to log in and show you the amazing benefits of actually having an account with Learnity. All right, so over here, I'm going to log into my Learnity account and show you that we are not just here to speak English and do gibberish. We are here because we have seen so many traders failed and even given up on trading. All right. That is why we want to revolutionize and revive the trading experience of traders in Africa. All right. So that we would have traders who can actually do this and provide for themselves, feed their family, take care of their financial needs, and be financially free. That is why we do what we do. Now at Learnity, we offer so many services, all right, and we have so many perks and bonuses for those of you who have an account with Learnity. Now, once you have an account and you log into your dashboard, there's what we call the rewards program at Learnity. Now, this rewards program is a program that has been made for you to learn and also earn with us at Learnity. So you are not just going to be learning and learning, you are going to be learning and also earning. And I don't think there's anybody here who try to say, oh, it's not fun earning something while learning. Right? It is fun when you can learn and also earn. Imagine you getting a cash reward, getting trading bonuses, when you just for you to learn a particular skill that would still make you earn in future. So what you do is, if you have an account, you register and you sign up an account, you come to this section over here, the rewards program, and then you can watch each of these videos. These videos are educational videos that teaches you about the foreign exchange market, the crypto market, the stock market. In general, it's a financial literacy platform where you can learn anything about financial literacy. You can see how to set your leverage here. You can see risk management here. You can see what you need to know about leverage and everything. You can see candlestick patterns and candlestick move. You can learn them here. You can learn trading, how to carry out analysis in this video. Now, what you do is, once you watch these videos, you are going to be given Learnity tokens. So the more Learnity tokens you actually accumulate, then you get your reward badge. If you accumulate the Learnity tokens to some certain level, you'll be awarded Learnity badges. Now, it is with that your Learnity badge, you'll be able to redeem your reward at Learnity. So the thing here is, if you watch as much video, you get as much Learnity token and you get a very high badge. And once you get that high badge, you'll be getting exclusive bonuses like trading vouchers, trading bonuses, and even cash reward. You can get all of those by just participating in the rewards program. And not to mention, this rewards program is absolutely free. You don't need to pay any penny for you to actually partake in the rewards program. They have been made for you for free. So those of you who are just starting out, if this should be your go-to. This should be your go-to. If you are serious about making money, about making it in the foreign exchange market space, this should be your go-to. You should spend more than enough time here learning. As you are learning, you are journaling, you are jotting down. The more you learn, the more experience you are gaining. And at a certain point, you will not need to learn again. And what you need to do is just start trading. But if you're just starting out, this platform right here, this reward section right here, it is your go-to where you should come, learn as much as you can, and even get to earn. All right. But if you are someone who have been trading for some while and you have not still found that profitability yet, either due to your psychology, either due to the strategy you are using, you can actually speed up that your process instead of going through roundabout, going over and over the same process again. You can actually skip that process by actually going to the course section. All right, once you go to the home menu, you go to the course section, or you use this button on the left panel over here. Go to the course section and register for the signature or the advanced course, depending on your requirements. Also, if you're a beginner and you're just starting out and you don't want to spend a lot of time, you want to speed up your process, you want straight to the point bullets, you want it straight to the point where there is no talking or beating around the bush, just come here. The signature courses are made for you. Everything here will take you direct. It's just like we are holding your hand and we are showing you the door. All right, all you need to do is just open the door. That is it. We are taking your hand, we are showing you, we are leading you, and we are telling you, see, this is the door where you're supposed to enter. This is where you are supposed to step. All right, just like a baby, when a baby starts to walk, all right, they need someone to guide them to for their first footstep. They need someone to guide them, all right, so they don't just slip and fall. And that is what we are Learnity we are doing. If you're a beginner and you're having that baby step, you can just come here, get this course straight to the point. You learn how to trade sharp sharp. There is no business around the bush. Then if you are someone who have been trading and you have not found consistency, you cannot do 10% in a month, you cannot do 5% in a month, you cannot pass pro firm, and you want to pass pro firm, you really need to make it work for you. Then just go for the advanced forex trading course or the ultimate forex trading course. All right, and your eye will just open. I don't want to say much about this. All right, your eye will be open and you'll be marveled about what we are talking about in this the premium VIP course. Right, these are smart money concepts, these are advanced concepts. Right, but for beginners, if you're just starting out, start from somewhere. You cannot fly after you have not worked. All right, you need to start from somewhere here. So you should start from the signature courses first. Actually, the Forex Market Foundation course. Start from there first. Don't start flying when you have not mastered walking. All right. So once you start from here, once you have graduated from here, then you can now go to the premium VIP course. Then you'll be able to do 30%. This is it here. This is it here. This is my track record. You can see this is my track record. This is my name here. This is nobody's account. All right. This is the profit here. This is my open position. You have the history. You can see my history here, my buy and sell trade. Yes, you're going to have little losses, but your win will outweigh the losses, and you can see the monthly returns over here. So this is proof that if I can do it, you can do it. It is not rocket science. It is just you dedicating yourself to learning and to understand how this market works. All right. So there is another amazing feature in the Learnity um, dashboard, which is called the streams. So if you want to enjoy the Instagram like, financial trading vlogs and videos, you can actually come to the streams and enjoy that here. There are also educational tips, and there are also, motivational things for you, motivational videos for you to watch so that you do not give up, especially if you are going through tough times, because sometimes you meet a roadblock and you just want to find motivation, you want something to keep you up. You can always come to the stream and engage here. You can watch different videos on the stream. All right, just there are always videos going to be uploaded here. Play them, watch them, and get your motivation, and then everything is done. All right, so the stream is a very important place. I come here every time, especially if I'm having a bad week or I have not made money for a week. I just come to the stream, section to gain motivation, gain inspiration, and then go back to trading. That is what it is. So you can also engage, you can like, you can comment. If this has impact on you and you like to share your take on it, you can just simply click on the comment button and put your comments down there. There are a lot of videos that are inspiring over here, and this is where I draw my inspiration from. And I believe they are also going to inspire you. All right, so it's on the stream. You come here and you can watch that. All right, so these are the things we offer at Learnity. So remember, if you are someone who wants to take your trading serious, all right, you need to be in this platform. We do not, we do not give that beating around the bush when it comes to financial literacy. We at Learnity, we are here to just help you. We are here to improve you by every means necessary. And you can also join our Telegram community where we also share insightful posts about the financial market, stock market, what is actively going on, the latest news in the financial market, and how it can impact the financial industry and the financial market as a whole. So once you are here, you can just click on the community, and then you'll be able to join our Telegram community in just a click. All right, so that is that for that. Now, if you have any question, now is your time to ask your question so that I can clarify them before we round up the session. Is there anyone here who has a question? I can see someone raising their hand. You can unmute your mic and speak.
Yeah, sorry. Thank you for your presentation. Please, can
Yeah.
we have a recording of this section so that we can go over it again?
Yes, you would have it after the session. You would have it. Just message the WhatsApp number that sent you the link to this webinar, and they would provide you with the recorded session, the recordings of the session rather.
Okay, thank you very much.
No problem. You are very much welcome. Is there anyone who has a question? You can ask now so I clarify them for you. Yes, someone is raising up their hand. Omar on Sunday. You can unmute yourself and speak. I am listening.
Okay, good afternoon.
Yes, good afternoon.
Yes, sir. I want to ask, how do we determine leverage?
Your leverage is determined when you are opening up your account. All right, so if you are setting up your account, you want to open up a trading account after you have registered with a broker.
Yes.
All right.
Yes.
You would need to set up your leverage. There are different type of leverage. You can use 1 to 100, 1 to 200, 1 to 300, and more. Some certain brokerage firms do not give more than 1 to 200 or 1 to 300, and that is why we recommend Xness. Xness can give you a leverage as high as 1:1,000, but you need to know how to set it. You need to know how to use it. Too. It's not that you go and set a leverage of 1:1,000 and go and be opening one lot size on your account. Don't go and blow your account. If you want to be using a leverage of 1:1,000, then you know that your lot sizes will actually be lower because your leverage is already higher. All right. So if you are using Xnet, you can enjoy a leverage as high as 1:2,000. Yes, 1:2,000. I think that's the highest. But most brokerage firm will give you only a leverage of 1:200, 1:300. And if they are giving you that type of leverage, it means that you would need to have a very, very, capital. You need to have a lot of equity. You need to be depositing at least $1,000, $2,000 on your account. You'll not be able to trade with $100, $200, $300, $400. All right. But with Xness, because they offer you that high leverage, you can open up an account and deposit as little as $50, $100, $200. But if your brokerage firm does not give you that leverage of 1:1,000, 1:500, it means that you'll be depositing as high as $2,000, $5,000 for you to be able to trade. All right. That is why that is important. It will enable you to
Okay, thank you. Thank you.
No problem. You're welcome. So, any other question from anybody? Okay, seems like there is no question from anybody. So, I hope you guys gained something from this session. I hope you learned a thing or two in this session. Yes.
Oh, yes.
Okay, that's very, very good. So happy.
Hello?
Yes, I can hear you.
Good afternoon, sir.
Yeah, good afternoon.
Sir, please, how can somebody get the link to those that site so that one can download all the tutorials and the lectures?
Okay. After this seminar, the WhatsApp account that sent you the link to this webinar, right? Just message them that you need the link to the Learnity homepage. Tell them you need the link to the Learnity homepage, and they will send it to you. All right.
All right,
Okay.
sir. Thank you very much.
All right. No problem. Okay, then I don't know if anyone has any question. If there is no question, I guess this would be the end of the session.
Thanks for your time.
All right, you are very, very much welcome. And I hope to see you guys in future coming sessions and would love to see you have made progress. Okay?
Thank you.
Thank you very much, sir.
Yeah, you are very, very welcome.